The market has declined and transaction volume is down. What opportunities should you be going after? When things turn south, opportunities do arise with those that have been on the sidelines. Who has been on the sideline for years now? Let's talk about the investor class. Hey everyone, welcome back to the channel. I'm SPENCERHSU, your real estate coach, and here are my tips for you to share with your clients on how to invest successfully in real estate. First, contrary to what you may think, investors don't have to buy in their home market. Many investors succeed by buying in markets in various locations all around the country depending on their budget and goals. This tip is especially relevant if they live in a higher cost area and want to divest out, mainly because they may prefer some more cash flow. It's important to know your client's goals for the property before advising them on what and where to purchase. The type of property, the length of time they intend to own it, and whether it will be a live-in situation like a duplex. These things matter and will change how you advise your investors. Overall though, investors likely will be renting the property out and would like it if the tenant's rent payment covers as much as possible the monthly expenses. So what would investors care about, and what are the steps to start working with these kind of investors? Investors tend to be more analytical than retail buyers, so you have to put up your numbers hat. First and foremost, understand how the client will be financing the home. Is it all cash or is it with a loan? If it's a loan, get that pre-approval done first as an investment loan to understand what they are comfortable in buying up to and what kind of criteria they are looking for. Some just want to break even, some are okay with negative cash flow, some want positive cash flow. Once you know this, start to share options that may be suitable. For most, the cheaper the home, the more likely the property cash flows, because as property prices increase, the rent to purchase value doesn't scale the same. That's why when you see those $1 million homes, they have the worst rent to purchase values. One of the great solutions and strategies that help snowball your investor base is that if they have good success and are putting in some sweat equity and remodel work for the home, there are so many opportunities over time that allow the future value to be more than the amount of capital put in. There is a strategy that you may have heard of called BRRRR. Have you heard about this? It stands for buy, rehab, rent, refinance, and repeat. This is the method for many investors and the route to building an efficient and successful rental business. Buy the house, fix it up so it can be valued at a higher price point, rent it out, make passive income, do a cash out refinance of the property, take the equity out, and use that equity to finance the next down payment. Very, very powerful for growing income. Now look, real estate is one of the best purchases an investor can make. As a rule, real estate appreciates in the long run, leaving investors with an excellent ROI. It's also important to know alternatives that other investors have. The stock market has not performed well. Bonds isn't really a good move. Crypto, forget about that. Some people have been completely wiped out. Implementing the advice from this video will put you and your clients on the right path and help you grow your investor base. But I want to hear from you. What are tactics you found useful when advising clients on purchasing investment properties? For more real estate tips and to learn how to thrive as an agent in a shifting market, be sure to subscribe and like this video. If you're looking to join a mastermind with my brokerage, set up a time below and let's go over a game plan to help you double your business. Thanks for watching. I'll see you at the next one.